Yes, I like the enthusiasm.
One guy in the back.
All right, hello everyone. I'm Olivia Voznenko. I'm a reporter for Modern Wall Street. And before I introduce you to our lovely panelists, I'd like to let you know that we're going to take a couple minutes after the panel to answer audience questions. So we're not going to hold you behind a firewall. Make sure you get some good ammo for these guys, all right? Now let's go down the line and introduce everyone. This is Ken. Go ahead.
Hi, Ken Talanian with Evercore ISI.
Howard Smith with First Analysis.
It's Gord Talpaz with Stifel.
All right, thank you, gentlemen. Now, cyber attacks happen all the time. But what happens when a major one like WannaCry enters the headlines? How do cyber stocks and the overall market react?
Sure, I can start. I think in general the market's become less reactionary to breaches versus where it was maybe a few years ago. You go back to Sony Pictures or Anthem, Blue Cross Blue Shield, and I think post those attacks, you saw pretty sharp reactions in cyber stocks. And I think it's reflective of something else that's happening in the industry. I think if you look at the buying patterns for security out there, security spending isn't as reactionary as it used to be. You know, it used to be that a big breach would happen. Okay, I got to go spend a ton on database security. I'm going to go buy a ton of Imperva. That doesn't really happen anymore. Buying patterns feel a bit more normalized. Breaches certainly matter. They feel like the normal course of business these days. That being said, singular events like a WannaCry or a NotPetya can actually have an impact. So for example, on the vulnerability management market, things like Qualys, Rapid7, Tenable, those have seen a resurgence of sorts post WannaCry, NotPetya, because guess what? Addressing the foundations, getting the basics done is really important in solving ransomware.
I'll just add that there is a delay. A lot of people think, well, I'm going to buy the stock because they must be seeing a surge in orders. And when an attack happens, what we hear is, the CISOs, and probably the people in this room can speak better to that, they're on lockdown. They're immediately, I need to fix the problem. I need to patch. I need to do that. I'm not worried about spending and how I'm going to prevent the next attack. So there is a delay even in the direct products that can solve the specific issue. So a lot of times there's this, it's not this quarter, it's next quarter. And I think that's part of what has smoothed the reactionary from the investors, the reaction from the investors. They don't buy it that right away. And so there is that lag, but I absolutely think it does drive an environment toward a sensitivity for security stocks. And we're seeing that in spades this year. I think some of the attacks, Target, Sony, all that, they're accumulating, and you're seeing it in the stock market, particularly this year.
I think just to add on, it's important to think about that big breach period of 2014 and 15 where people did spend a lot of money and spent 2016 and forward trying to rationalize a lot of that spending. You couple that with a desire to reduce a vendor count, and I think you have to think about how those folks are going to go to market again the next time a renewal comes up. And I think that's what you're seeing more now than you are necessarily a reaction. But the next time they come to the table, they say, well, why didn't we prevent this, right? And
what about insurance in this space? Can't I just get insurance coverage with AIG, for instance, for cybersecurity?
So, that is one option. And I think if you look at a lot of the insurance policies today, the actuarial tables aren't built for cyber risk. What they're built for is if you get breached, can I call up Mandiant from FireEye and have them come in and do a forensic work? Can I do some cleanup? Can I try to prevent the loss of the customers, right? Something that's a lot more tangible. But there isn't a true full life policy, as you will, for cyber as it exists today.
So I wanted to add to the earlier point. I think from a mentality standpoint, too, you've seen a shift on the part of the buyer where it used to be if I spend more, I can prevent breaches now. When we talk to CISOs at the C-suite level, the idea now isn't so much can I prevent being breached. If somebody has enough resources they can breach you, the thought process is what can I have deployed to mitigate and reduce my risk profile, right? So it goes less from black and white prevention towards risk management, which I think is fundamentally changing the space. To talk about, I think that what we've seen is an increase in the number of breaches, but the average cost of remediating a breach has actually gone down from about $3.8 million about 2 years ago to about $2.8 million this year, which I think is really interesting. So that's just a mentality.
And I think there were certainly several examples before. Target was somewhat an eye-opening moment, and you can insure some of the costs of remediation and the systems. You can't insure the market value of your own stock from the reputational hit that you take from a breach and having to disclose it, and Equifax and others. That is an uninsurable risk, and that boardroom attention, that boardroom focus, so you're not in the headlines, really has come to the fore.
Yeah, Target was certainly a target.
That's actually a really important point, right? If you think about why a lot of companies will pay a Mandiant, right? There are companies that have been breached that you will never hear about, right? And Mandiant does a very good job of that. They will clean up your mess, and people will never find out about it. If you think about what's changing out there in the industry, regulation is now forcing disclosure. If you think about Equifax or Yahoo, they basically had an unlimited timetable to report that breach. If you think about GDPR in Europe, you now have functionally 3 days to report that breach to your customers. And I think that disclosure is going to be game-changing in a lot of ways, because that reputational risk, I think people really worry a lot more about than perhaps the actual cost of remediation.
Yeah, regulation is a hot topic in the overall market, but how has the public cloud affected the cybersecurity market?
I can start on that. I think there's two different things. I mean, as a customer of these cybersecurity companies, you're thinking about your roadmap to the public cloud. For some companies, that may mean jumping right directly to that. For most, though, I think it means having a hybrid cloud. Right, you have on-premise and you have public cloud, and something in having to be able to manage between the two. I think from a stock perspective, you look at companies like Checkpoint, Fortinet, Palo Alto, they're constantly asked about the cloud because they make firewalls. Firewalls go into on-premise data centers, and that's considered a potential secular threat to those businesses. I think what we find is over the next probably 5 years, you have that hybrid environment. People continue to buy firewalls, maybe not as many units as they might have in the past, and then we bridge the gap between that on-prem world to the cloud, and slowly we probably move more and more there.
I think there's a pretty broad debate right now in public cloud, which is, can a traditional on-premise vendor translate into that environment, or do you need new functionally native first-party solutions to support that environment? And I think what you've seen is actually pretty interesting, right? You've seen vendors like Illumio or vArmor or Cloud Passage emerge to do a functionally native cloud-based firewall. And none of them have done really all that well. What you're seeing right now is a vendor like Palo Alto actually doing really, really well in the public cloud environment, extending their reach now with the purchase of Evident.io, but actually winning with their first-party virtualized firewalls. And in my channel checks, what we've seen in the last 6 months alone is functionally an inflection. Because what people want now with public and hybrid cloud strategies is centralized management, something that's functionally holistic. And if you think about security more broadly, it's been historically a very siloed market. You have pockets here, pockets there. If you think about public cloud or SaaS, it's one more silo. If I can bring that into the mix, if I can centralize that, if I can follow policies wherever they might go, that's really important. If you think about attacks today are really complex. They're multi-vector in nature. Simply addressing one area of your infrastructure isn't enough. Being holistic is really, really important. That's why I think you're seeing traditional on-prem vendors actually do better in public cloud environment. And actually runs counter to my thesis probably from 2 years ago, where I would have thought that the on-prem firewall vendor would be, I think, really exposed in that environment. I think you're seeing a bit of the opposite, at least with Palo Alto Networks right now.
I'll just add, I think if you go back a few years, there was a perception that a lot of companies were not going to move their most critical data to the cloud. I think in large part that has been debunked, and there's a widespread view on Wall Street that it's all moving over time to the cloud. There'll still be hybrid environments. There's still going to be an on-prem part, but there's nothing that sacred that you're not going to put in the cloud. So it has created an urgency to make sure that cloud is secure, and I think there is a perception that native cloud solutions can do a better job of protecting the cloud than on-prem migrating, and that is a perception being put forth by a lot of the cloud-based vendors that are native and want to support that. I think the evidence is still quite out with some historically on-prem solutions having great success in extending that to the cloud.
I think there are 2 more points I want to make about public cloud. One is that you think about public cloud right now, it's multi-cloud, it's fragmented. You may have some AWS, you may have some Azure, you may have some GCP or something else in the mix. What can be that centralization, that layer that kind of permeates across all 3 of those, including your on-prem infrastructure, whether it's big iron, physical, or virtualized? What we see a lot of times right now in our channel checks, for example, with a name like Palo Alto, with big resellers, is that they look now more towards a vendor like that can actually follow policy wherever you go. Instead of standardizing on AWS or VMware for AWS and for on-prem, you can have this unification layer like a Palo Alto that permeates across all aspects of your infrastructure. And that's actually, it's winning mindshare right now. It's early days, but it's winning mindshare. The second point, I think, which we haven't addressed is what does the push to cloud actually mean for capacity into the actual traditional on-prem data center and home office? And think about traditional firewalls and network security, they're driven off capacity, right? So what we're actually seeing is actually a 2.5x fold increase in network traffic as a result of the push to cloud and into SaaS, driving the need for greater capacity firewalls, at least right now, if you believe in the hybrid world. Secondarily, you're also seeing very heavy growth in SSL traffic. Most of these applications, most of the public cloud is encrypted data that requires a more powerful stream. And yeah, maybe you go buy an F5 to sit in front of your firewall, but eventually you probably want to do one thing that consolidates everything into a single function. And we're seeing more of that as well. So what's funny about all this is that we think there are ways for firewall to actually win in public cloud. At the same time, there are clear drivers in the on-prem landscape to drive more growth in traditional on-prem firewalls as well because of capacity growth.
I just got one more, not to bog down on cloud, but it is an important topic. What does Microsoft, Amazon, and Google do in terms of native security in the cloud, and how does that affect the pure play companies? To date, they have offerings that I think are viewed as inferior to that you'll get when you buy some dedicated things. What we hear a lot is also no one's going to be purely in AWS or purely in Azure. You're going to have a multi-cloud environment, and you need an overlay architecture that works with all of them. But conceptually, I think it would be very disruptive to the market if you were to see Google or Amazon or Microsoft specifically for cloud make a major, $30, $40 billion acquisition of one of the leading security players publicly traded. That could shake up the market.
Well, we know that the cloud holds a lot, right? I didn't realize that the cybersecurity cloud space holds even more, it seems like. But aside from that, where do you see growth in the cybersecurity space?
Where don't you see growth in the cybersecurity space? Probably a better question. The threat plan's expanding. The breach types are becoming more sophisticated. I think what's happening here is sort of twofold in nature, right? We're seeing growth in demand for cybersecurity, and that's being offset by an increase in number of supply of vendors. So depending on who you ask on any given day, you may get 2,000 vendors, you may get 2,700, you may get a little bit less, a little bit more. There's a lot of vendors in this space, and there's a lot of competition, and that puts some measure of pricing pressure out there. So for example, the endpoint space, which is growing really, really nicely, there are 8 vendors that do functionally the same thing in that space. It stands to reason, under basic economics, and this is me putting my fancy UChicago degree to work here, supply and demand, more supply, that could put pressure on price, and we're seeing that. So for example, in endpoint, what you're seeing is good growth in that market, but the average cost per endpoint in prevention has gone from $15 a seat to less than $5 a seat today, and it's still going down. We've heard of deals being done at $2 a seat, for example, because of all that competition. So there's a lot of growth out there, but you also have to think about all the competition that exists out there as well.
I think, it speaks to some of the earlier points there in this conference. There is, a large amount of vendors targeting a finite amount of spend. And I think there is an expanding area of cybersecurity when you think about going into securing drones, securing IoT or industrial, where there are new markets that are growing, right? And so I think those are, from a private company and to some extent a public company standpoint, higher growth areas. Because a lot of endpoint and more traditional areas are just so VC targeted by VC funded companies, and there's a lot of competition there.
I think Ken, you brought up a good point earlier, which is that there's this push towards consolidation, right, that's happening across the space. So you're seeing growth in the arena, but that growth is becoming a bit more concentrated. In 14 and 15, you could argue that it was a rising tide, and most ships were lifted in that environment. If you look out right now, for example, you're seeing names like Checkpoint declining on license over 10% per year, year on year, even in a market where guys like Palo Alto or Fortinet are executing well in that space. And I think what's happening here is that the budget is there. It's being better focused, because I think the buyer is becoming more intelligent and saying, I'm not just going to keep buying everything to have everything. More security is not necessarily better security. I'm going to focus my bets around the people I like, around the vendors I like, around the vendors I trust. And so I think the winners are winning more, and the losers are perhaps losing more in a market like this.
I'll just add, anything, you've heard a theme today, there aren't enough people to do the work. Anything that automates, takes people out of the process, makes you more effective with less personnel is getting a lot of attention.
Yep.
So what do you like to look for when analyzing a company besides the old P ratio?
I mean, personally, cash flow is king for me. I mean, I think it depends on the maturity stage of the company, right? If you're just starting, it's a land grab. When you're selling to enterprises, you want to go out, you want to get as many customers as you can, and then eventually you can tail back that expense level by cutting salespeople, and you'll have a very profitable stream of business that follows you. I think in the earlier stage companies, it's important to watch that growth, but as you get towards that later stage, the cash flow generation capabilities relative to its peers tends to be the best metric for most of the publicly traded companies.
And I'm one of the few public analysts who also run a venture fund and invest on the private side, and I approach it from a similar lens. What David Walt said this morning is pretty much what I look for in the public companies as well, and that is, what is your sales and marketing execution? I look at that more than the latest R&D pipeline and development pipeline, but the ability to create a sustainable path to the customer that is effective and differentiated. And then two, to the extent there is a moat in terms of competition coming in, I like spaces, unlike endpoint, where there's lots of venture coming in and lots of challenges, that's counterintuitive a little bit, and it's not the focus of the up-and-comers. It's not what Sand Hill Road is investing in right now. So those are the two things I look for.
So I love the endpoint space. I mean, it's a fantastic space, highly crowded, but things I look for, I'm fundamentally a growth analyst. I care the most about growth, and I care the most about recurring revenue. To me, that's really, really important. The most important ratio to me is LTV to CAC. That's the most important ratio to me, especially for a company in growth mode. So things I look for example, are a dollar renewal rate that exceeds 100% consistently. That matters a lot to me. Contract durations matter a whole lot to me as well. I think, to me, recurring revenue is king at the end of the day. And in security, I think it's really interesting, right? Because if you think about recurring revenue in security, it's a little bit different than recurring revenue in broader software. If I'm buying more from you next year versus this year in security, it means your products actually work. If your products don't work, I'm going to turn them off and simply move past them. So I think it's validation of that solution. I think additionally, if you think about security, a lot of times, if you think about the legacy model, I'd sell you a firewall, then I have to wait 5 years and sell you another firewall. So all I really cared about was that refresh. If you think about recurring revenue and software as a service and cybersecurity, I have to deliver value to you every single day. If I don't, you'll turn off my solution and my renewals will dip. So those things matter a lot to me.
So what are your thoughts on subscription models versus outright sales?
So subscription versus license. I mean, I think the future is subscription in this business. I mean, if you think about license, in the public sphere, there's still a wide mix. There's still mostly licensed and appliance-based companies, but every new company coming out functionally is a recurring revenue or a subscription company. I mean, last year we saw probably, I think, the last vestiges of companies getting out that were either hybrid model or license-based models, and I think we're pretty much done with that sort of going forward. And I love that model. I mean, I think we're 12 years behind the broader software universe. I used to cover SaaS, and I remember covering Siebel, and Salesforce came around, and trying to manage that disruption was virtually impossible for a vendor like that. I think, to me, the same thing is now happening in the cybersecurity landscape. I think it's the model of the future, probably the model of the present today.
And I don't disagree that I think it's the model of the future. I think the capital markets like it. It creates some predictability. I don't have an issue. There's CyberArk is a company I like quite a bit, and it's a pure perpetual license maintenance model, and I think it works. And they go in and they sell a portion of the solution, and they go back and they expand year after year and sell more to that same customer. So I don't have a problem with either model. I do think there is some fallacy in terms of, the recurring makes it that much more predictable. It does, but then as an investor, the sensitivity around small changes in the recurring flow as opposed to a perpetual where you can see wide variations, and Wall Street is more tolerant of that. It just narrows the window for error, in my opinion.
I think it also creates a different dynamic with the customer, right? If you listen to a lot of companies that are switching over from a more transactional, perpetual, or appliance-based model to something more recurring, they'll talk about building a customer success function within the organization. And what that really means is they know that every year, usually, they have to go back to the customer and justify why they're paying them, right? So it becomes much more of a collaborative sale versus, if you were to go back and look at, I don't want to pick on Oracle, but I'm going to pick on Oracle. They're going to jam you with a license, and then they're going to come back and jam you again. and people don't like that.
They'll get over it. Don't
Get
worry.
over it.
All right, let's get into like the Bobby Axelrod billions conversation. How are companies using hackers as a tool?
How are they using hackers as a tool from a white hat perspective? Or?
Sure.
I mean, any good company will pen test their infrastructure. I think anyone should, including cybersecurity companies. I think that's fundamentally foundational. Yeah, I mean, I think if you're not testing your network constantly, then you run the risk of being breached. I mean, it's funny. I was talking to a Fortune 500 CISO probably 2 weeks ago in Maryland, and he's sitting there telling me like he's a Cisco shop. He's always going to be a Cisco shop, and that's the case, in perpetuity. And I asked, do you run white hat tests? Do you bring people in to kind of do pen testing? And his answer was like, no, why would I do that? Not understanding the value of his own data, the value of his own customer data set. And I kind of looked at him and like in the back of my mind, I'm like, this guy won't have a job in 2 years if that's going to be his mentality. You have to evolve in your thought process. I mean, I think you have to test what you have. The hacker's always changing, always evolving. So it's not going to solve everything for you, but I think it's an important part of what any good security program includes.
I think one thing you may be referring to is there are some hackers that are now using the platform to notify companies that there are issues, but also to use that knowledge for the investment side. And I've always said, I prefer if I'm going to be hacked and somebody's going to find a vulnerability, first let me know, but if you're going to do it to hit my stock rather than sell that information to the Chinese or something that's going to steal my insiders. I haven't seen a lot of that where it's hacking is being used by hedge funds and other things to really get insight into vulnerabilities of companies, but I know what's out there.
For short side research, of course.
The other thing I would add is a few of the larger companies offer bug bounty programs, and essentially it's a way of crowdsourcing vulnerability management. If you're a talented hacker and you can find a problem, and there's a substantial monetary reward for that, and it's the white hat method, but there's also the black hat method as well.
So what would you like to see be developed in this space? What do you want to see companies invent and bring to the table in cybersecurity? What's missing?
Yeah, I think the biggest challenge right now is if you think about cybersecurity as a market, we have to block everything, defend against everything. The attacker has unlimited attempts effectively to get into your network. I mean, that equation puts you at a disadvantage. I'd like to see an evolution of more offensive tools personally. There's regulatory issues, I think, in that market. But I like where things like deception are going, where it's like, okay, somebody breaches your network. I'm not just going to keep blocking them and let them keep trying. I'm going to mess with them. I'm going to take away their time. I'm going to make it harder for them. And it's kind of dark, but I like that approach. I mean, like, you're dealing with a human adversary at the end of the day, and the equation is on their side. Even if they're caught and they're in Russia, what's going to happen to them? Nothing. So how do you change that balance? How do you change that equation? How do we change that dynamic in cybersecurity? I think there's a way to evolve the tool set into that direction, and that's where I like to see it go.
I agree completely with that answer, and I'll just add, for Internet of Things, which I spend a lot of time on, particularly wireless, using satellite, cellular, where devices are out in the field, I think there's a perception that we're going to apply the traditional network-type securities across a broader attack surface that includes mobile and IoT, and I think the type of assets from the operating systems they run on to the processing power they have to run systems to keep them from attack are just fundamentally different. So you heard about that a little this morning, but I think there has to be some new paradigms coming up for the infrastructure for the IoT world, and that's something I'm focused on.
I think that the one thing I would add is, similar to what Gur had to say, a lot of the problem we have in cybersecurity today is lack of talent. Right? You can't find enough people to use the tools that you've bought, or enough skilled people. I think in the future, we're going to trend towards more of a machine versus machine hacking, and I don't think we've quite advanced to the point where the defensive tools are that good. A lot of people like to talk about AI or machine learning, but if you really drill down to what the content of that is, it's a very simple algorithm of if then, if then, if then. So I think that's where we need to see more advances.
Maybe 2 more points there. I think we've spent so much time in the past few years on things like prevention and then detection. but we suck at response. I mean, we're terrible at it. I was talking to a CISO yesterday, and his response mechanism is I quarantine the machine, and then I just delete the image and reinstall a new image. It's a terrible response mechanism to dealing with a breach. But that's common. That's really typical. It's like, oh, it might have dormant malware. We don't know what's going to be on there. Better to be safe than sorry. Just wipe it out. We've done so little work on the response elements of it. We focused 90% of our dollars on detection, on prevention, because it's sexy. Response isn't necessarily as sexy, but I think it's really, 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 really important. I think additionally, one more piece I think that's really important is what companies have fundamentally undervalued time and time again is the value of their data. They always undervalue the value of their underlying data. You look at security today, most security sits either at the perimeter level or on the endpoint. Why shouldn't security be brought closer to the actual data layer itself? What's actually happening at the data level? Who's accessing it? What are they doing with it? Who's manipulating it? What's happening there? Because really, that's what you're trying to protect at the end of the day. Why is security sitting so far away from that data layer?
Any other points, guys? No? Okay, because we have to, like I said, we're not going to keep our audience behind a firewall. We are ready for some viewer questions.
Firewall wouldn't block it anyway, but go ahead.
Yes, to your point.
What's the potential play in Amazon, Microsoft, and Google divesting their cloud business?
I mean, we can all venture a guess here. I think the one that might be more likely is probably Amazon. And I don't cover Amazon, but this is just my hypothetical scenarios. If they run into regulation issues, they might have to divest it. Google's created a corporate structure that might allow for divestment of assets like Google Cloud. I think, speaking to Microsoft specifically, Azure is such a critical part of their strategy going forward. I would be surprised to see them divest that.
I guess I would just say from a security standpoint, and I think you may have a different opinion, so I'd be curious to hear it. If you divest one, they see so much. They're responsible for so much, so many different corporate networks and data and things like that. They get a visibility and a scale that's almost unprecedented in terms of what they see. So they're in a position to take some action security-wise that could be at least differentiated, if not unique. And I do think combining a company with that type of infrastructure with some of the leading cyber security companies out there, as I said, could be game-changing and interesting. The Palo Altos, the checkpoints, for some of those larger companies in the hands exclusively of an Amazon or a Microsoft, might be disruptive to the industry. And you may have a different
I do
opinion.
have a different answer, and with respect, of course. It's funny, I came into this industry probably 14 years ago, and I covered Symantec right out of college, and the fear then was that, Microsoft's pushing into endpoint. It's going to destroy the endpoint market. They're going to own it because they own the OS layer, so of course they're going to own the endpoint market, and that never came to fruition. Time and time again, I think you've seen large infrastructure and software vendors try to push into security. Security is a fundamentally different problem, and they've never really been all that successful in it. Microsoft has tried, I think, through a variety of acquisitions, right? They bought Hexadite for $100 million. They bought Adelon for $300 million, and they've done quite little with it at the end of the day. They bought I think, Secure Islands for $80 million as a DLP-based tool in their cloud environment. And, if you look at, for example, just their cloud-based SSO efforts in Azure AD, it still requires an appliance. I mean, just something like that is just, it's so fundamentally basic, they haven't even gotten there yet. So I think to me, that's part one, is that the empirical evidence suggests there's a broad history of misexecution for them in the space. I think secondarily, there's a broader notion amongst the enterprise that why do you want the fox guarding the henhouse, in a sense, right? You should have a third-party vendor doing your security. Do you really want that first-party vendor doing both your security and your infrastructure? I think history has shown us that no, you don't want that. You do want some measure of third-party controls. Finally, one last point is that find me one company that's really standardized across one single stack. You won't find one really unless it's a new startup. Most are multi-cloud in nature. Most are fragmented across different pieces of infrastructure. So maybe, okay, you do a little bit of Microsoft security in their stack, but then what do you do for AWS? What do you do for GCP in that environment? I think people want holistic security. I think people want something that goes over the top of everything they have and reduces that fragmentation, those pain points, puts less pressure on your people, as we talked about, already a limited resource. So I think they can't do that because they're invested and pushing more of their own products. They're Apple with the App Store. They're not going to sell you anything for Android. That's just not their business plan at the end of the day. So I think there's a lot of factors at play that actually push, I think, the third-party market, I think, more aggressively in that direction. And it's funny, 2 years ago, I would have said, security groups in AWS, it's going to crush the cloud-based firewall market. They're going to dominate with these things. It's basic. It does what you need. In fact, we've seen the opposite, actually. And once Palo Alto actually figured out their pricing mechanism and go to market in that space, moving away from a per-host model towards more of a holistic ELA-type model, they've done quite well in that market. So that's my 2 cents.
I would just add one more thing on that. I think if you look at Microsoft's strategy, for example, in security, they want people to move data into Office 365 and Azure. That's their growth mechanism. Mm-hmm. So they just want you to be secure enough that you're using that product and it's going to offer a basic level of security. Mm-hmm. I don't think we've quite moved to the point where they want to sell you a separate SKU for a security product. And I think it's the same for AWS. Now, AWS actually, in designing their data centers, people don't know this, a lot of people don't know this, but they design their own TCP IP stack that like 20 people in the world know. So the underlying architecture there is very secure, and then on top of it, they offered some basic global functionality, and then opened it up to a marketplace of third-party vendors, as Gur explained, that have done quite well in there. So I don't quite see them moving to disrupt the pure security vendors at this point, but
I will say one more point there. The people who really worry about AWS now are actually the channel partners, because they feel like they're being pushed out of the equation, right? Where you can go and consume that security service from a third-party ISV directly from the Amazon store. So when I talk to a lot of the resellers, they get really freaked out about what Amazon's doing in that space. Not because Amazon will own that security stack, but because they can be disruptive as far as the selling motion. And security is still one of those markets where the channel is your bread and butter in a lot of ways, and they rely on security. So it's interesting, when you talk to the channel, now it's pretty funny. Like they're evolving. They're now selling things more like hyper-converged storage solutions like Cohesity and Rubrik. And that's different than where it was a year ago, because they worry about what's happening in the public cloud sphere, but not because of fewer sales, because of that disaggregation now of that push and of that marketplace.
Okay, and we have a question in the back.
Yeah. How's the Europe GDPR going to impact American companies from a security vista?
Yeah, we do a ton of work on GDPR. I think it's functionally the most important mandate I've seen in my career, beyond HIPAA and PCI. Any company that sells into Europe that manages European customer data or European consumer data is responsible to comply with it. If you don't know what GDPR, it's functionally a punitive regulation that says if you get breached and you don't notify affected consumers within 3 days, you can be penalized up to 4% of your global revenue, not your regional revenue, your global revenue goes into effect. I think in May
25th.
Yeah, pretty quickly. I think what's interesting about GDPR right now, post Facebook, Cambridge Analytica in the U.S., there's a growing chorus now for GDPR-like regulation in the U.S., and I think, by the way, it should exist, because there is breach notification regulation on a state-by-state basis, but most states, like Georgia, for example, and it's important because Equifax is based in Georgia, don't actually have a prescribed mandate on how much time you have to actually notify the consumer. What you've seen that's different in the U.S. proposed regulation versus Europe is actually pretty interesting. It's one thing. It's not a fine. It's proposed jail time, which I think is really interesting. Kind of speaks to our mindset overall versus the Europeans. But it's really important because it goes back to the earlier point of, companies don't mind paying the $3 million when they've been breached. They don't want anybody to find out. They don't want that reputational risk. If you think about when cybersecurity hit the C-suite a few years ago, it was when the Sony Pictures CEO had her emails exposed across the web and ultimately lost her job. Then it became a C-suite concern. Exposure, that's a C-suite issue, and I think that's why it makes cybersecurity all the more relevant because of that.
Ken, quick points.
So I would just add, I think it will also cause some spending over time for some vendors that I would view as perhaps non-core, right? Everybody has firewalls, everybody has endpoint. I think you're going to start to see more folks focus on things like CyberArk solutions or Imperva's database security and some of the offerings from Varonis. So I think that there are actually beneficiaries as a function of GDPR. I also think it will depend on how the regulation ends up impacting companies. I think shortly after it goes into effect, I would not be surprised to see a large multinational corporation get hit with a fine. They want to set an example. And I think to some extent it's also an alternative tax for the Europeans. They couldn't get enough antitrust suits to work. So,
Howard, any opinion on that?
I'll just say I think it has elevated it to the C-suite, and much like, I think GDPR, that is something that the executive suite and the boards know about, and it is causing a scrutiny and perhaps a change of focus on how security is bought and implemented that you wouldn't see without the regulation. And I do think it will be a model for others to look and perhaps emulate over time.
Okay, well, that about breaches time. So let's give a round of applause to our panelists. Thank you so much.